Today is Sunday, tomorrow is Monday. That means it is time for a price prediction for AMC stock. Now, this upcoming week is going to be very important. Why? Because the executive order went into effect on Friday, and what do we know happens the following trading days after the executive order goes into effect? Well, the heavily shorted stocks in the markets tend to rally, not only AMC, GameStop, but you can consider a lot of other stocks heavily shorted as well. These hedge funds, they're going to start experiencing margin calls here in the next couple of trading days or so. Now, on top of that, here in these videos, I like to go over the economic data as well, what we're going to have for information coming out, because that can obviously move the markets and affect AMC at the same time. So we got a lot to talk about. The CPI comes out this week, and that's definitely going to be very, very important. And we do have some good news, some great news actually out of China. So let's get into this video. If you guys find value out of it, hit the like button, subscribe to the channel, source comments, questions, or concerns down below in the comment section. But most importantly, make sure to get yourself those free stocks with Webull, Moomoo, and Public down below in the description of this video. And if you guys want to come trade with me live in real time, link down below in the pinned comment. But without further ado, let's get into this video. So first things first, before we talk about AMC, let's go over the good news out of China and then the economic data that will be coming out this week. And overall, it's a pretty dry week. If we do look at this week, what we have coming up on Monday, you really don't have anything. On Tuesday, you only have the balance of trade APR that comes out at 7:30 in the morning. That's highlighted in red, expected to be a high volatility catalyst. And then 7:30 as well, you have exports APR and then imports APR. And that's it for Tuesday. For Wednesday, you really don't have anything. Like, not at all. You have some bond auctions, stuff like that, some oil data, but nothing too crazy. Wholesale inventories month over month, 9 a.m. On Wednesday, but it's not expected to be anything huge. On Thursday, really nothing else at all. You have initial jobless claims for obviously last week, and that doesn't really do anything for the markets either. But on Friday is when you do get a little bit more information. So you have core inflation rate year over year for May, 7:30 a.m. that comes out on Friday. 7:30 a.m. as well, you do have the inflation rate year over year, so CPI. And then inflation rate month over month, core inflation rate month over month, and then you do have the Michigan Consumer Sentiment preliminary survey that comes out, and that's also a very high expected or I should say high volatility expected catalyst, because it does tend to move the markets around a lot with those consumer sentiments. After all, you know, when it comes down to inflation and where inflation tends to go, it's based off of expectations, right? If business owners expect inflation to be 5 or 10%, well, they're going to want to raise their prices at least 5 to 10%, if not more than that, which causes that inflation. So the expectations are very, very important. And at the same time, you know, we're seeing a lot of inflation right now because over the past 2 years, people have been talking about, you know, this inflation's going to come, you know, prices are going to rise, all this, and people had extra money. So when people did start to raise prices, nobody really batted an eye because they expected it, right? So that's why it's very, very important for the consumer as well. You're going to get information like, what do people plan to spend for Christmas? You know, how often are they going out to eat? Things like that. And that is very important, obviously, for the consumer sector. So there is that. That's the economic data. CPI will be important, but that is all the way on Friday. Now, secondly, you do have this. Beijing will relax more virus controls on Monday as the threat subsides. And this is very, very good for inflation, right? With China shut down, that obviously hurts supply chains, that causes inflation in that way, but it's also keeping the price of oil up as well, because, you know, if the second largest economy in the world, China, is not using oil in the same way that they were before, well, that's a big issue. That's definitely a big problem. So that's that. Hopefully it does drop the price of oil a little bit, but we will see. Obviously not a guarantee, who knows, but we need the price of oil and the price of food to come down to really avoid this inevitable deep recession that we are going into. If the price of oil does not go down, that single-handedly will cause a worse recession than 2008. So either way it goes, just be prepared. Have your money on the sidelines. Wait for those steal deals. recessions create more millionaires than lottery winners by like 10 times the amount. So that's that. Now let's talk about AMC, because obviously you guys know about the executive order on Friday. That is very, very important. And what you guys may or may not know is that the executive order goes into effect typically, right, in January and in June. And then the next following days is when you actually see the biggest moves. So I do expect this upcoming week to be a very bullish one. Now, I don't know how high we'll go or, what necessarily is going to happen. We could have a delayed effect with the executive order, kind of like we have with earnings, right? Everybody, talks about we dump after earnings, but actually we tend to rally. But there's a lot of a delayed effect built into it, right? Almost every single earnings, you drop the following days after earnings, and then you rally the subsequent weeks following that. So we could see something along those same lines where we don't necessarily have to have a huge week next week, but possibly, the second, third, or fourth week in June could be very good. So I do think this is just a very positive thing for the squeeze overall, especially the longer it actually stays into effect. We have not seen it stay in effect for longer than 3 or 4 days at a time in the past. And, that's where the government essentially stops the party, is when they revoke that executive order. So I have no reason to think it would not do something similar this time around and make AMC stock rally in a very substantial way. Now, we're currently sitting at $12.45 per share. So we'll talk about the price prediction and the technicals in just 1 second after we do go over the Ortex data and the Stocko tracker data, because I think that's very important for the context here. And we have seen a lot of very bullish option activity over the past couple of weeks, as you guys can see. Even look at all of these calls that came through towards the last hour of trading on Friday. You did see a $14 call, $13 call, $10 call that all came in the last hour of trading. 2 of these came in the last 30 minutes of trading. All in all, that's worth about $200,000. But these hedge funds, they are targeting here's the June 3rd, so that one's already expired. That was a day trade. They're wild. But they are by a large majority targeting the July 15th as well as June 17th expirations for the call side. So there's that. It says 133 orders totaling $40.52 million, a positive order value of 45% over the past week. And considering what has happened over the past week, it's been pretty sideways, slightly trending to the downside. So that's pretty damn good in my personal opinion. Now, the shorts have completely just lost their mind. They continue to short the stock just into the ground. The short interest of free float is 23.43%, 120.79 million shares that are sold short. Cost to borrow minimum 3.5%, cost to borrow average 14.05%, cost to borrow max at 19.21%. Even on Friday, you had borrowed shares of 3.89 million, return shares of 836,000. So I think it's a lot of algos that are honestly shorting AMC stock when certain things happen in the markets, when you get certain bad news. And I think that could be a very, bad thing for their overall portfolios, because, if it's not a person that's evaluating the situation, then they might not understand the lack of a reward that you will see shorting AMC. Like, the odds of AMC dropping 50% are a lot lower than the stock rallying 50%, and that's just a bad scenario to be in. You don't want to be shorting AMC at $12. Like, what's the point of buying puts at this point when you're already trading around its, book value, or where even bears of AMC stock would say, hey, this is pretty much a fundamental, valuation price that we're looking at right now. So that's that. That's the short interest. Free flow out on loan, 34.83%. So there is still a lot of shares that could be used against us. Free flow out on loan, that is up by about 3% in the last 7 days. Shares out on loan as well, up about 3% over the last 7 days. Currently sitting at 179.57 million. So you do have about 59 million shares that are still outstanding that are borrowed, but have not necessarily been sold short yet. So there's still a lot of room to kick that short interest up. And if all those shares were sold short, the short interest would be about 35%. Even at 23.5%, that's very high, but 35%, that would be absolutely ridiculous. And there's really no way for the hedge funds to stop this at this point, right? Let's be honest with ourselves. It's only a matter of time. So whether you think the executive order is going to have a big deal on AMC, or you think it's something else, does not matter. It's coming. it's coming. That's the only way to put it. They're not going to start to slowly cover. They're doing the exact opposite. They're slowly adding to their positions. It looks like more aggressive here as of the last week or so. So that's the honest truth. And if you guys have not seen my last video about that, the honest truth about AMC, definitely check that one out. Now, as far as the stock tracker data, hedge funds really targeting that June 17th and the July 15th expirations. Like I said, 5,000 calls that are in the money for June 17th, 277,000 calls that are out of the money for June 17th, 118,000 puts that are in the money for June 17th, and about 76,000 puts that are out of the money for June 17th. And, you know, this is just a lot of potential fuel on the fire to see a major rally in the share price of AMC. I think it goes without explanation there. July 15th, 7,200 calls that are in the money, 339,000 calls that are out of the money. A massive amount of option activity on the call side and a decent amount of option activity on the put side as well. 54,000 puts that are in the money, 53,000 puts that are out of the money. So all of these puts that are in the money, that constitutes of buying power when the price of the stock does go up by the market makers. Same thing when the price of the stock goes up on the call side as well. So you're like a double-edged sword right now. You're really primed on the option chain to see a big move if you do get that FOMO, a reason, the executive order goes into effect and it starts affecting the price of AMC, whatever it is that causes it. You're really primed for a major rally in AMC stock. As far as the gamma squeeze, FOMO, and you guys know that's out there. Look at something like Redbox, right? The FOMO is still out there. People are waiting. Even hedge funds are waiting, and I do think that's why you're seeing some of those very weird large option orders that are very far out of the money for AMC that have came in over the last couple of weeks. So yeah, very exciting as far as that is concerned. And now just on a technical picture here, slight uptrend to the upside, even though we have been pretty flat since about May 12th when we did hit this low at $9.70 per share. It looks like $10 is going to be a support level if something bad just happens in the markets. I would watch to see if we can hold 10, and it looks like we probably would. Now, to the upside, we need to break out above $16.46 per share and $16.84 per share. If we can break out of that, then it certainly looks like you're coming up and retesting this 200-day moving average, and that would not surprise me to see that in this upcoming week. Not at all. To see 100% week would not surprise me, considering the executive order going into effect, or possibly even more than that. But I think the executive order is probably going to stay into effect this time, especially if it doesn't instantaneously cause a major rally like we seen last time. It might just stay into effect, and that could actually be a good thing, not seeing a rally, the first day it goes into effect, rather than, over the next coming weeks, because at that point, they're probably not going to extend it, due to it probably wasn't the sole reason why these stocks did start to rally, even if it does turn out to be that way. So that's basically my price prediction. We could, break out above these 50 and 100-day moving average and make our way to about the 200-day moving average. And that would be $26.79 per share. Call it in between 25 and 26. That would be very reasonable in my personal opinion. And that would definitely set us up, to break out of these March highs that we've seen around $35 per share. And then ultimately, once you're at $35 per share, all you need is a 100% day to be back to new all-time highs. So I think it's very exciting. I think there's definitely a lot to be excited about, but keep in mind, this is not a video to say to sell all of your shares and everything and go buy some options and YOLO on July 15th. That's not what I'm saying. It may or may not happen in this way. Obviously, when you connect the dots and put it together with the executive order, with the short interest, with the market conditions that we're faced with, it looks very bullish, but don't get the picture twisted here. Bottom line, what it comes down to is it's going to happen. I don't know when, I don't know what will necessarily cause it, but we know the shorts are not covering. If there was a time to cover on your short position, it is definitely right now, as the price of the stock is beaten into the ground. So there's a bit of a disclaimer there, but nonetheless, the RSI is trading at 44.76 and the MACD is still bullish, which is very surprising. We'll see if that can remain bullish. If we do have a good start to this upcoming week, it will likely stay bullish, and you'll probably see, honestly, more shorting activity the longer that thing stays bullish. That's kind of what it looks like as of right now. Like as soon as the MACD went bullish, the shorts just continue to pile on. The short interest is up like 3% over the past 10 days. So kind of wild, honestly. Hedge funds are literally digging their own grave at the current moment, but they could care less. So that's pretty much going to be all for this video. If you guys found value out of it, hit the like button, subscribe to the channel, leave your thoughts, comments, questions, or concerns down below in the comment section. Leave your own price predictions as well for this upcoming Friday. What do you guys think about CPI? Is the market's going to fall? Is it going to go up? Is AMC going to rally? Is it going to crash? Let me know your thoughts. Let me know how you guys feel. As well as that, we will be live in between 10 and 11 p.m. Eastern Standard Time tonight, like we always are on Sunday nights. So come join us. It's a blast. Come ask all your questions if they do not get answered down below in the comment section. Get your free stock with Webull, Moo, and Public. And if you guys want to come trade with me live in real time, start off the trading week in the program. Link down below in the pinned comment. Nonetheless, thank you guys for watching. Enjoy the rest of your weekend, and I will see you in the next one.